Hey guys, welcome back to another trade breakdown video. So read the disclaimer before you watch this video. And this is my exit, and I made a profit of 18,387. I have traded the Indian market. It doesn't matter on how much profit I made from this trade. All it matters is what was my analysis, whether it will help me in the future or not. So I'm going to dive into the charts and use my common sense in order to understand what the market is trying to tell me, so that you get the value, and also I will also have a value from this video. Moving forward, you will see this pattern repeating itself and you can cash out from the market again and again. So watch this video and try to understand the market. I'm not going to complicate anything, and I'm going to make things simple based on a premium and discount. Now let's look at the charts and understand what the market is trying to tell us based on technical analysis. So if you look at the market based on your 1 hour chart in the Nifty, you can see that Nifty is having a greater bias or a bullish bias, and the market was trying to go up from that particular area. And you can see that the market has created high highs, broke the structure right around here. This area was broken. The market broke the structure, took the liquidity again and tried to go down. But based on the bullish bias, or the based on the collective effort of the market, the market actually tried to go up from that particular area. And you can see here there is a 915 candle which broke the structure, this minute structure here, which broke the highs, took the structure. And you can see that after breaking the structure, the market was not able to go up from this particular area. What I did is, based on my analysis, I took the entries right around this particular candle and I exited on this candle. All you need is a candle like this in order to succeed in the market. And the thing which you need to do is you need to be present in the market with patience in order to execute this type of trades. So based on your analysis and based on your high time frame analysis, you can see that the market is going bullish. If you use indicators or basic price action, you can see that. And after seeing that, what I did is I was actually expecting to take an entry at this particular area. But based on my analysis, there is a ceiling right around here. The market actually, there is a resistance right here. But still the market is going bullish, and based on using the basic common sense, you can see that this move happened right around this particular area. This area is where the moves actually happened. So this low is really relevant for me. That's why I took the entry right here. This particular low is 18,611, and from this particular area you can see that the market created a premium. You are bullish and the market actually created a premium right here. But as a bullish trader, my view is to take the trade at a discount, which means that whenever you are taking a trade or whenever you are buying something, if you use the basic example, whenever you are buying something, you need to buy the things at a discounted price, or a level where there is a margin of safety. If I'm taking an entry right around this particular area, my margin of safety is to put the stop loss below right here. But what if I take the trade near my stop loss right around here? What will happen here is it will help me to increase my probability. It will help me to reduce my risk of taking a trade. So what I did is I was actually waiting patiently to take or execute the trades, and the market actually created a this high high. The market went back down. What happened here is this 18,613, this was broken and took the liquidity below this particular area. The market took the liquidity. The market was not able to close below this 18,611, which make it a relevant area in order to watch. Even if you look at the 15-minute, you can see that the market is actually respecting this particular area, took the liquidity. You can see that even in the 15-minute, you can see that there is a fair value gap. This you can call as a fair value gap, and this fair value gap was respected. This was a bearish buy side liquidity. The market took the buy side liquidity, took this fair value gap. I'm going to expand this area. This area is a fair value gap, and from this particular area, the market actually went up. From this particular fair value gap, the market actually went up. What you can see here is, after taking any particular area, you need any particular trade, what you need to do is you need to go back to your chart in order to understand how you become profitable or how you made that particular loss. So by looking that on a daily basis, it will give you an understanding, or it will give you an understanding about what the market will try to do. This type of patterns, you can see that happening again and again and again. And whenever that happen in a large scale, that's when you are going to execute your trades, and that's when you are going to make money from the market. So this particular trade, this is where the market was on a bullish trend based on the hourly chart. In the hourly chart, the market was on a bullish trend. The market was trading on a premium. I was watching this particular low. Market went, took the low. I was near my low, and I execute the trade based on that understanding. I can say that this will happen in the future as well. What you need to do here is you need to understand the market, what the market is trying to tell, what the market algorithm is, what is the market participants or the big money makers are trying to do or try to manipulate the market. By understanding this, and when you put that in your subconscious mind, you can see that this will repeat itself, and whenever this repeat itself in the future, in the index or in the Nifty chart, you can actually capitalize on that. I have made some money on the trade. I am not focused on the money aspect right now. What I'm here is I'm actually understanding what the market is trying to tell here. What the market is trying to tell here is, I broke the structure on the 1 hour. I came back to the discount level. That's when I'm going to execute. This same thing is going to happen in the future as well. But when that happen in the future as well, this is what is going to happen in the market again and again. That's when I'm going to capitalize big. So if I'm able to make more videos in the future, I'm going to demonstrate and I'm going to show you examples where the market is creating that same thing again and again in the market. So that's what I'm going to do in the future. So you can see that this fair value gap was respected. I took my major entry here. I added right around here. I exited right here. That's when I exited, and I'm not going to confuse you with market structure analysis. I'm not going to confuse you with anything. What really happened here is a basic structure. In the 1 hour, the market was going up, created a market structure break, went back to the discount area. We took the trade on the discount area, and boom, that's what happened. That's all you need. And I can see that it can break this particular area, I don't know. But whenever the market tests in again a fair value gap, something like this, I'm going to execute my trades again and again. And I'm going to do that in the future as well. So that's how you are going to win. And when you see the chart of Nifty again and again throughout in my video, I'm going to tell that I started out to trade the market by trading the index, which is Nifty. And I used to trade some major names such as SBI and Reliance and Infosys. And currently what I did was, when I started out, I never had any success in my trading career, just like any other people. And it is particularly normal. And I never had any success in my trading career. That's when I moved to other approach. When moving to other approach, I used to adapt to other market as well. I used to trade the US market. I used to trade gold. I used to trade Forex. But what I'm trying to do is I'm coming back to the charts where I started. I started with Nifty. I moved to other markets. Now what I'm trying to do is I'm coming back to Nifty as well, Nifty again. Why I'm doing this? Because I'm doing that is to prove myself, and it is to prove myself and telling you that it is possible. If you have a proper market analysis, if you have a strategy which is proven, which can be worked, which is working, and if you have a proper risk management and psychology, you can succeed in any market. And it all matters to us as an individual. You need to be prepared for itself. You need to have that mindset towards market. Only then you can succeed in the market. So if you see here, this particular setup, just like this, market creating a structure on the 1 hour, coming back to the discount area, this will happen again and again. And whenever this happens, it is going to take liquidity. You can see that if in 15 minutes, you can see that this low was broken, but you can see that this liquidity was taken from this particular area. This is where the retailers put their stop loss. This is where the smart players took the market. You can see that instant bounce, took the stop loss and instant bounce, and it was going up from that particular area. So this is going to happen in the future if by God's grace if I'm going to upload more videos in the future, I'm going to show that again and again. And thank you so much for your valuable time. And whenever you trade, you need to understand that you need to work on a proper structural strategy. by having a proper risk management and psychology. And thank you so much for your valuable time.